my screen showing the chart?
Yes, you are all set. We see your screen.
Okay, perfect, perfect. I'll just have this chart up, and that's from the 27th, March 27th. So it gives you an idea of what my chart looks like, kind of towards the end of the day. But I've got some things to kind of talk through before we get there. Um, first, I want to say that there are way better traders in this room than me. A lot of just overall knowledge that I don't have. So I would encourage anybody who can come on to do it. Because everyone learns for everyone. I mean, lots of guys post in the room all the time, and it's always a great learning process for me when I have time to take a look at those in the room. I think Kim wants me to give this presentation because she thinks if a trader like me can do this, then anyone can do it. So we'll walk through kind of a little bit of my journey. But yeah, as Kim was telling me, I joined Compass a long time ago. Actually, I think the first year Ray was part of the group, and then I work commitments had to step away for a number of years, and then came back about 3 years ago. Picked it up, and in the meantime, I'd been in a lot of different trade rooms. I tried a lot of different systems, and I what I always found was because I had that first year experience with Ray, whenever I got into different trade rooms, if they couldn't fully explain why they were taking a trade when, I was lost because it's like I can't repeat that, which means if the moderator is gone tomorrow, I'm up the creek without a paddle. So I came back to Ray mainly because I know how deeply he explains it and really cares about the people that are in his room. So um, I also, in my trading history, um, I went through trying to execute trades on multiple markets at the same time. So I think even when I came back and started with Compass again, I was trying to trade gold and oil and NQ and trying to learn all the intricacies of all of them. And it was a struggle. I was making progress, but it was a struggle for me just to make ends meet on why was I taking this particular trade? And then you always cross over and you place a trade on the NQ chart when you're supposed to be trading crude. And I did all the mistakes. So, the old adage of you don't have time to make all the mistakes yourself, so you have to learn from others. For a long time, I was trying to make all the mistakes myself. I also must admit early on that I am a recovering fader. So I try to fade markets all the time. And the process with that is, hang on a second, the dog is wild. Um, but the problem with everyone when you try to fade is it's great to look at a chart at the end of the day and say, "Oh, I would have faded here, I would have faded here." But when you're actually in the live market, trading it isn't fading it isn't nearly as easy as you think it is. So I had to come up with some way to process that. Um, what I do is I do divergent tops, divergent bottoms, um, which really has helped me because now I've tied in a bunch of the information that Ray and the Compass Group provide. So when I'm doing a trade, my consideration, so on the chart we see, and I don't know if you can see my mouse moving, but the light green box up here with the red circle or surrounded by red, that's the European Open. So for NASDAQ, that's a European Open. The US Open is darker green with a red surround. These vertical lines are um, major announcements within the market. So you get those from Forex Factory or wherever you happen to get those. Um, all the pink lines, and let me see if I can find a blue line on here. Right here, this blue line. These are the market maker line or the dealer levels that Ray sends out 10 hours in advance. So when I wake up in the morning and turn on my charts, I'm going to put the European Open on here. I'm going to put all of his key levels on. These are the major levels. 2100 is the dark dotted line. 2150 would be the somewhat smaller. Um, if I go back in my history, I would never put any of these things on my chart because I didn't really know the significance of them. But the more you put them on the chart, the more you recognize how important they are because they will be turning points at some point in the into the future. So on this particular chart, I also have the smart money and I have the delta line plotted. All of the other lines that I'm going to refer to are going to be over on the my trading view chart. So I trade these charts next to each other, and the trading view charts are the ones that have made the big difference for me because that's where the spectrometer lives, and learning from the spectrometer is a key to growth. Um, I have a very specific trade rules in my for my trade process. I only take divergence trades in the direction of the trend unless there is a double divergence on the spectrometer. And this would be a double divergence right here. There's one, and then there's the second one. You can't see the spectrometer, but that's where it is. So I would be taking that trade. And this one was a double as well. So I would be taking this because both of these were against the prevailing trend. Rarely do you run into a divergence that's with the trend. It'll happen once or twice a week. And I always try to load up on those when it happens. Also on this chart is these little green or red boxes. That's where, as Ray talked about in the last class about the shakeouts, that's where the shakeouts appear on the charts. So I'm looking for shakeouts. I'm looking for flushes. This would have been a max flush. I'm looking for divergence, and I'm looking for off of levels. So the tweets up here, and hopefully I'm not talking too fast, but the tweets. This is what Ray would send out this message: fund selling at this at the moment. So I try to record those when he sends them out and then do the line to say, where were we on the chart when that tweet came out? So it kind of helps me keep track of what's going on. Any trade that I take needs to be confirmed with the value lines, and value lines are on the trading view charts. So that's a further confirmation. So when I get this, even if I get this double, if I don't have a confirmation on the value lines, I'm not going to take the trade. Um, I do not trade in the first 15 minutes of the market or around major red news. I'm just not good enough to do that. So hopefully skills will come that I can actually start to do that because obviously everyone knows that's when you have the biggest moves. Um, I take one type of trade on one market, although I'm now testing a second type of trade. And it's interesting that Ray just did that class because on March 3rd, he did a class that's recorded in the student section, basically the same thing. And that's the first time I'd seen it. So I'm trying to integrate the momentum trades into my trading arsenal. We'll put it that way, because I am a lousy momentum trader. I'm just bad at it. Um, I also use super low margin for my accounts as well as my funded trader accounts. So I'll throw up some numbers here at towards the end of the presentation, and we can kind of discuss the margin side of the business. This is actually today's chart. So this will tell you that I'm marking all my starting points. I'm marking the major news announcements. I'm drawing on here where, and this is the raised lesson today, right here. These were two trades that I took today, and because they're obviously momentum trades, so I was happy about that. I'm still doing these in my demo accounts. I'd like to put 15 to 30 days before I introduce a new system or a new trade into my actual live trading. I currently mainly trade. I'm East Coast time. I mainly trade from about 8 in the morning to 9:15, and then I'll come back usually around 11 o'clock. Occasionally, we'll be able to take a trade between 11 and 1. Maybe one day a week I'll be able to do that. So I operate very restricted. I have one type of trade I take, and I trade at I'm going to say market off hours. So the movements aren't as big, but I'm not looking for the big movement. I'm looking for the nice little consistent movement that I can take trades on. Um, funded accounts, I blew tons of funded accounts, trying to earn $1 million by the end of the week or the month. I took a step back and said, if I want to qualify my account in 6 months, what size of trade or what size of profit do I need to for each level of funded account? And that's anywhere from a $50,000 account to a $300,000 account. So I'll post some of the daily results here at the end, and you'll look at it and you'll see 14 different accounts are um, funded accounts, and they're all spectrum of sizes of profits. Today's profits were anywhere from $18.56 to $180.82, and that's all based on the size of that particular funded account. And my approach was, if I could take 10 accounts and go through the qualification process and then the funding process and get done in 8 months, I think that would be pretty good. So instead of trying to do it in 8 days, I was trying to do it in 8 months, and it really allowed me to be, I'm going to say, much more relaxed in my trading. It was a slow process from start to finish. I probably spent, in fact, probably I know exactly what I spent, but it was about $3,500 to qualify all of those accounts. But now now I have 10 live accounts that I average about $1,124 a day. Um, so was it worth it? Yeah, it sure was, because it taught me a lot of about patience in the process. Um, as I sit here, what do I need to improve on? I need to understand more of the power of Max. I mean, Ray's lesson today, uh, even though I've been in the room for a couple years, half of what he was talking about, I don't trade it. So I need to learn that. I need to get my lines correct so I can see the Charlie D and exhaustion trades, which I don't see right now. Um, I need to catch up on my 1,000 hours of training videos that I've not seen yet, and I need a better understanding of the influence of the bond market on the other markets. And Ray talks about those, and the scattering of information you get. It's hard to keep track with what Ray's teaching, but all the stuff he's taught, I found to be extremely valuable. Problem is, I've only implemented a small portion of it. So this again was today's chart. This is kind of what my profit and loss from the 31st looks like. So you can see these are all 14 different, or actually, yeah, 10 to 14 different sizes of funded accounts and how much goes into each one. The line at the top is actually the one that goes to my IRA account, and that's the amount that's copied on my IRA contracts. So this is for one contract, and that's the way I like to see it. I don't like to I'm now currently trading 13 contracts on my IRA. I don't want to see the big total in here. I want to see this one. And then at the end of the day, I can do the calculations, and we'll kind of show the spreadsheet on that. Another one, this is from April 1st, April 2nd, April 3rd. So this was today's results. And again, some people are going to look in here and say, well, I don't want to earn 20 bucks, but it's the total. And if the consistency of trying to do it day in and day out. Um, I have recorded, I have pictures of these results going back a full year. So any day I can pull it up. So, at the end of December, January, as everyone does, I think, goes through the process of just doesn't feel good about your trading. Yeah, I'm not trading really very well. Well, uh, I didn't trade well in January, December or January, but those are kind of tough months to trade. But when I look back, I can go back and I can look at the month. I can look at each day and I can see the progress in the process that I made in the process. Larry, I use Apex. Uh, that's the trade funder that I currently use. So back on, and Kim talked about this a little bit, back on February 1st of last year. This is when I started my journey after trading a lot of different systems. I really settled on this process for about 4 months, and then said, okay, I'm drawing the line in the sand. I'm starting right here, and I'm going to record it from every day going forward. Um, so this is again per contract. At this time, I was trading three um, contracts in my IRA account, and I had some funded accounts in here. So this was my process. You can see, obviously, see wins and losses as it goes down, and then this is where it is basically 13, 14 months later. I'm now at 10 contracts, 11 contracts, 12. I'm actually earning a new contract about every 5 or 6 days, the way that's rolling. Um, so again, it's what the individual amount that I show on my dashboard that I'm looking at during the day. So I'm looking at this number, and then at the end of the day, when I enter everything into the sheet, or I go to Thinkorswim and check the totals, this is what's showing up. But it all started from a very small base, one trade, one setup, hit consistently during off hours throughout the day. So I make some notes in here on, what went wrong, what went right on that particular day, and then I got my monthly totals and daily averages strung out here as well. Also in here is my funded accounts. So these are my funded accounts. This is the 10 funded accounts. Actually, now it's 14, but 14 funded accounts average. So when I showed the sheet that had all the different numbers on it, I add all those up, divide it by the number, and then it gives me the average earn per account. And then it gets multiplied in this case by 10. Now I'm down here multiplying by 14. So that where this number is coming from. All of these roll across and get into the final column out here. So yeah, as I said before, if I can do this, anybody can, and you don't have to earn, three, four, $5,000 a day per account. You just have to grow it slowly, And Kim and I talked a little bit about it. Um, yeah, I started with a good size IRA account. Um, I went through and I kind of did the math, and I grew the account by about 200% last year. Fantastic. It was a goal or achievement beyond my goals. But even if you had $1,000 and you started trading micros, and you could achieve the same success of 200% growth in 5 years, that $1,000 goes to $240,000. Now that's not having taxes taken out, all the other stuff that has to go into it. But it's not only for big accounts. You can grow a small account if you're steady at what you're doing and just accomplish each goal as it comes. Sebastian, I have not had issues with Apex regarding withdrawals. Now, recognizing what I am showing is I'm showing once I qualify that account from it to make it a PA account. And then obviously, as everybody knows, then you have to still go through the process of getting it to qualify where you can actually do a withdrawal. You have to get a certain amount in there. Um, I started counting those as soon as it went to a PA account. So some of these accounts I haven't, I fully funded them and could actually take a withdrawal in December on two of the accounts. Other ones were in November and October. But so I haven't been taking that many withdrawals yet. But I have heard stories of problems. I haven't run into any yet. What's the clip size on each account? Um, PD, I'm not quite sure what you're asking. I mean, I'm wondering if you're asking. So for my $50,000 accounts, I trade two micros. For my $150,000 accounts, I trade four micros. $250,000 accounts, I trade six micros, and $300,000 accounts, I trade one full contract. And that's how it's set in the system. It's trade copied, so I don't have to worry about any of that. But that's my formula, and it's somewhat interesting because the $50,000 accounts were actually the ones that qualified first. So those were obviously leveraged a little more than the others, but they all eventually just kind of came along. And again, the secret for me was slow and steady. And then as it goes, all of a sudden it just starts to snowball because you're adding contracts, you're getting better, your account's getting bigger, and then it just swings crazy, crazy. I mean, as Kim and I were talking, I was at in my IRA account, I was at $550,000 at the beginning of February. It's now gone over 1 million in 3 months, 2 months. It's crazy.
Yeah, that's right, because you were at in December when we spoke, and you said and he had mentioned to me at times that when he thinks, "Oh, I'm really not doing so well," and he happened to look and he was at 400 some thousand. And one thing that he does that I absolutely love with his consistency, he only adds another contract when he's reached 100,000 in profits. So talk about, that, because in the beginning it takes a while for it to start building. So I always loved how, and he sent me a message and said, "Hey, got to that other contract." So I knew he'd hit the mark.
Yeah, I think to go from 3 to 4 contracts. So this was back in the beginning. I think it took me 78 trading days to get there. Now, here we are a year later. Every 5 or 6 days, I'm rolling to a new contract. So um, that's the part that still blows me away.
Yeah, and I think a lot of people would have that, you know, they look at it and think, well, that's not enough. Like you mentioned, thinking, it's only $20 for the day or whatever, but it's that cumulative effect. Then it starts building, then it starts compounding. And, one thing that, and I mentioned this earlier, that I love is that you really put yourself in a position to take away the emotional risk. Because, everybody just looks at the risk that they're taking on the trade. But for some, people, when they, like pretty much hiding from yourself the bigger total, you're only looking at one contract so that you're not having to see that. And Mark said that way he's not closing out trades because he sees 3,000 or 5,000 or 8,000. He's just managing the actual position. So I'd like that for you to talk a little bit about that, because I thought that was really important, having how you've been able to, keep your emotions in check, the things that you've done.
Yeah. So obviously, I was fortunate enough to be able to take some money from an IRA from a 401k and move it to an IRA that I could self-manage. Um, but what I did not want to do is have a 5 or 6 or 8% drawdown on that account because guess what? I didn't want to go to bed at night and go, I lost $24,000 today. That doesn't feel very good. Um, I was willing to make the trade-off that I'm willing to grow it way slower. I just don't want the big drawdown. So the worst drawdown I had, and it was in, I think it was July of this past year. Um, I had a $3,000 per account drawdown, and at that time, I think I was trading 4 contracts. So it was down $12,000. Um, that was a hard pill to swallow. That one was probably where I uh, did the greatest thing to break my fader addiction, because that's what I'd done. I had tried to fade the market. I knew I was right, so I added in. I moved my stop. I added in, and got wiped out. I was lucky enough to say, "Well, this is enough," and close the trade because it kept going against me. I mean, I would have lost $30,000 if I just kept in the trade. Um, but that's the one thing that it was the pain threshold that finally I said, I can't trade, I can't fade anymore. I've got to have a better system. So I've come up with a few rules. The new value lines I use, I really like. Um, but recognizing the markets are going to change. So the value lines I'm currently using may not be effective when we get back into a growth phase of the market where we're not in the fear factors. It's just kind of being willing to change and pay attention to what other traders in the room are using and doing, because that's where I learned most of it. I mean, 80% of it is, well, 70% is Ray, and 30% is easily how I see other people taking Ray's information and how they're using to trade it.
Yeah, I
Is
think
that
that's so important because, and one of the things that you had said, that you were kind of fearful of, he's like, well, I'm not so sure. I don't use as much as others, but I felt like your message was so, would be so important because I really feel that there's a number of you traders sitting there that can relate with the things, that Mark's, talking about and sharing, especially on the risk and making sure that, you can stay in control without taking the risk. I know at one point Mark and I talked about he was trading NQ and he switched over, was trading some gold. And what he was able to find is he was able to get the same profits, but not having to have as much risk in the swings. And those little things, it's a lot of the stuff is the little things that you can do for yourself to help manage your emotions.
Yeah, to answer some of the questions in trade management. So I'm entering on a bar in the trend direction or against the trend. Um, I usually put the stop right above the bar. I know. I'm sorry, the dogs are wild again. Um, I usually put the stop just above the entry bar. I know Ray talked today about basically an emergency stop because he doesn't want to get spiked out. Um, I will get spiked out of trades because I'm trying to maintain a tight stop because my habit would be if I didn't have a tight stop, I'm going to be more tendency to move that stop. Taking enter another contract and move the stop a little bit, and everything will work out. Um, that's how I really work. So it's an entry at the bottom of a bar, let's say for a sell, and my stop loss is usually 2 or 3 points above the high of the bar, or if there's a nearby swing. Um, but the more I get into understanding the max system, the fewer times I even get to within halfway of where my stop is. Where it used to be, you get in a trade and immediately goes, 5 points against you, 8 points against you, 10 points against you. All of a sudden, you're down $200. Now, what do I do? Um, it's a rare occasion that I get into any real trouble on a trade, because oftentimes I can feel it's not a great trade. I can either cut it off right where it is, or I'll move that target to basically entry. So if it pops down there, boom, I'm out of the trade, and I'm happy because now I can sit on the sidelines. I can pick the next one. How would you define a tight stop? Again, it's all by the bar size that I'm taking the trade off of. So if I'm trying to get into a sell trade and I have a large down bar, um, I will put my stop at the top of that down bar. Now, oftentimes, depending on the indicators and the value lines, what I'm reading in the market, if I'm trying to sell and I get a big down bar before I get in, I will often require a 50% pullback into that big down bar before I'm going to be interested in entering that trade. So I miss a lot of trades because it doesn't pull back. I mean, you get a big down bar and away it goes. I'll miss that trade, and those used to bother me, um, but now it's more of a well, that's trading. Things that used to bother me was missing trades to the extent that I would get in too late. As Ray always refers to, get in at dumbass prices. I would do that all the time because I'm going to miss this trade. And if it wasn't 100% of the time, it sure felt like 100% of the time that trade would go against me. and it would be a big loser because I didn't get in a good spot to start with. So getting those types of trades eliminated was a big key for me. Let's see here. How would you define a tight stop? How many ticks? Again, I hopefully I answered that question. Um, what are your typical trading hours? Again, I'm usually pre-market and then after 11 o'clock because I'm working. So I've got a job that I do um, for probably another 6 months. But so I don't, one of my rules is I don't trade the open anyway. So I don't need to be there at the open. In fact, that oftentimes works out to be a perfect time to take the dogs out because then I can't place a trade if I'm out in the backyard with the dogs. Trading view trades entries. I don't have anything. Frank, I will, let's see, slide this over and see if we can get it here. Can you guys see my trading view charts?
Right now we see your spreadsheet. We saw your trading view chart before, so
I'm trying to figure out how to get this. Let's see if I do that. Then maybe if I bring this over, maybe this will do it. Can you see it now?
I think that's Ray's chart.
Raise chart.
Which I'm not sure how we have that, but that's Ray's screen.
So I'm right in front of Ray's screen. Let's see here. Let me see if I try this again. I think I need to pick a different, let's see. How's that? Is that trading view?
That is, thank you.
Okay. Okay.
Well, it's
So,
yes, there you go.
Frank, this is my trading view chart. These lines they're going to be different from what Ray was showing because I use different colors because I have a black background. This is my HFT line. This is my market makers line. This is my nominal interest rate, nominal yields, and this is the one at this point. This is the one um, value line that I'm using to trade NQ. So a trade for me, if I can, and again, I haven't looked at these for a while. A trade for me would be, let's see here. Trying to think of where. Oh, here would be a good trade for me. So, and from my Ninja Trader chart, I'm pretty sure this was marked up, showing that this was a flush. And then what you'll oftentimes will get after that flush is you'll get a divergence. So I got a lower low, and it's showing on my uh, max that it's not anywhere near as low as the price action has gone. So my entry would be down here on this big green bar because I want to see that the buyers have come back in. So I will buy this and put my stop 2 or 3 points below the low and let her run. Now, uh, saying let it run is a loose term for me because I'm going to look to take a $300, $400 out of this trade and be done with it. That's one of those things that I have to get way better at is I don't know if I've ever had yeah, I have, but rarely do I have $1,000 trade. Ray talks about them all day long. Sammy or Reeve, Peter all show $1,000 trades. I almost never get a $1,000 trade because I'm not trying to get $1,000 trade. I'm trying to get to a point, and I'll exit out of the trade and be happy with that. So hopefully that answers some of the questions. There's a few others on here. This one was a divergence. I didn't like it. There are not enough bars in here. I'd like to see more bars in here to be able to recognize that. But obviously in this case, it worked nice. So hopefully that here's another one, another flush, the divergence off of the flush, which is one of those trade setups I really like, and away she goes. Let's see here. Presume you would exit mark if your position went slightly against you with a short-term value change. Yes, that's Theo. That's kind of what I'm watching. Is I'll try to cut that risk short if I get a value change within the bars. Let's see, Frank, you're a better trader than I am if you hold on because I'll be happy to get out and um, just post a profit for the day. How would you organize your studying of raised material? Um, and it's probably Demi. Sorry if I'm mispronouncing your name, but for me, I now have a list of the 10 or 15 classes I want to watch that are still dealing all in NQ or uh, Max specific classes because I still have so much to learn with Max on the power of Max. So, if I was studying raised material, that's where I would start. I would try to determine which market I want to trade. And then there's always a boot camp for that particular market. And it's anywhere from 1 day to 3 days for a boot camp where everything about that market is explained. And that's where I would probably start. In fact, when I want to, I'm thinking of going into gold or oil soon. Um, that's probably what I will do. I'm going to trade them in sim. I'm going to go through the training material for that particular market and try to learn as much as I can to see what the nuances of the market are. Yes,
I
Reef, you're right.
yeah,
Failed flushes are very good. Yes.
yeah, I think it's so important in when you're talking about in the classes. One thing that's stuck out to me that when we were speaking, you were saying he listens to Ray's classes, and then if it's not something that he's doing, it goes in the good to know, don't need to do anything with it file. And then, what he's looking for is anything that's going to enhance what he's already doing. So I love that because, there's a lot of things. And, Ray often, says, if this isn't your market, if you're not doing this, then, skip it. And some
Chuck it in the
traders
bin.
have, yeah, yeah, he does say chuck it in the bin. And traders have a hard time with that because it always looks good. So it does require, and I think with you, working in your busy schedule, it, makes you have to say, you know what, that sounds good, but it doesn't pertain to what I'm doing. So I'm going to chuck it in the bin. So I just wanted to talk about that. That was a great question from Demi.
Let's see. I think we got everything else. Could you explain what a flush is? Um, from the technical perspective, if Reeve is on, Reeve may be way better at explaining exactly what a flush is. Um, on Max, it's when the price just accelerates, but the market makers don't move with it. In fact, start to move in the opposite direction. So the market makers are almost pulling their bids or offers at the time, and the market will just fall through to a new level. Um, and then that's oftentimes where you're going to get a turn. Where I often find my best turn on a flush is when you get a divergence after either a max move higher or lower away from that flush, and that's where I would enter a trade, not on the flush. I'm not good enough to trade flushes the way they are, um, but that's the way I handle them. Cole, I trade market orders, recognizing that there's going to be times where I get slippage. In fact, all the time I get slippage. Um, but I found a higher frustration level to being when you're trying to place 10 contracts or 13 contracts, whatever it is, and you get 8 of them filled, and it moves to your target, and it's like, oh, that's great. So I do not mess around with limit orders. I go market. Yeah, Mike D, for me, divergence would be the price has gone lower, but Max, the high frequency traders and the market makers have both gone in the opposite direction. They're not nearly down to the level
of where this price is. So here we're in front of the price. Now the price comes back down, gets lower, yet the market makers and the high frequency guys are all moving in the almost the opposite direction. Hopefully, I've answered everybody's question. Oh, one
Yeah,
thing,
thank you so much.
yeah, Kim, we talked a little bit about kind of the funded accounts, um,
Yes.
and uh, I that's what at this point that's basically what I'm getting. I still get paid, but the funded accounts are for basically the fund money, and I have certain of the funded accounts that are assigned to different things. So I've got four of them for one for each of my four daughters, um, and a few of the other ones are basically giveaway accounts. So the the fact that you've got that ability, and I think everybody here has that ability to learn the process, learn how to trade, um, do the funded accounts because it's an easy. I'm not going to say easy. It's a way to achieve your goals without you having to risk your own money. Um, it's frustrating. Um, yep, you know what? There's things I can do in my IRA account that I can't do in a funded account, um, and that's okay. It's just a process. What works best for you is going to be kind of the best way to go. For me, it was one type of trade in one market and grow slow. But you'll be amazed at how fast the account grows if you just chunk away at it. I mean, I think Kim calls me the plotter trader because I just plod along. I'm not the sprinter. I'm the tortoise in the race. There's a lot of rabbits out there, but I'm the tortoise. And you know what? I'm happy being the tortoise.
Yeah, I think you've done a great job. That was the one thing that really, stuck out to me, when we first started speaking. And he's really stayed true to these principles that fit for him. And we talk about it a lot, with Ray, that, he does provide many ways, many edges that you can see in the market. You have to find what fits for you. And so I think even in this workshop, you know, focusing in where traders can find one trade. And it just so happens that in Ray doesn't know what Mark was doing. I didn't have a complete understanding. And so it was fantastic that it happened to to fit with what Ray has taught yesterday and today. So you guys can get to work. We want your
And
story next.
Larry, I assume you're asking about this pink purple line. Um, the formula is right there. It's 1 over US 10 year. And this is the one, I started using it about a month ago. I love it. But I recognize as markets change, as we're not in this recession, stagflation environment, this line will become less relevant. And I will have to find a different line. I've got other value lines that I've used in the past, and I'll just try those out and see which one seems to be working better at that time for that particular market. Here's a trade from that could have been a trade. I didn't take it from Ray's class today. Is we've got the market maker, or I'm sorry, the HFTs up here. We have a pullback. We have a deep pullback on the HFTs. It's actually not as far down as it was over here. This would be, Ray would say, this would be a buy. So you'd buy somewhere in here, depending on your risk tolerances. Traditionally, I like to see one of the two lines turn. So on this one, my entry would have probably been here if I'd been paying attention to what I was doing, um, and then just write it up. Bread and butter. So I think
Thank
a lot of guys in here know that Reeve is so successful. He's buying islands. I think
you.
I think the next one he's going to buy is the island of Australia. Have you put a bid in on that yet, Reeve?
Uh-oh. Now that's Theo's. That's where Theo is. Theo, are you gonna? Theo's been really moving up. Theo may block the bid.
Well, you can probably get New Zealand then. Any other questions I can answer? Hopefully, this has been a help.
Thank you.
Um, and
Thank you.
if I can answer any other questions, I'm more than happy to do it. Or Kim has my email. If somebody wants to reach out to Kim and send me an email, ask me some questions, I'm more than happy to answer them for you.
Thank you so much. This is so valuable. I can see by the chat. I knew it would be helpful. So sorry, I've been twisting your arm and and begging. I knew this would be so good for everyone. I think it's important for traders to be able to see that the hard work pays off, that going slow and steady works. Because I think so many people get frustrated and then they end up giving up when they're just kind of right there. If they were to peel it back a bunch, then they would get there. The other thing that I loved when we were talking, Mark is a girl dad, which we have a number of girl dads in our group, but I love that he set up his accounts here that he they get the profits for the month. So I said, he's lined it up so he knows he's going to get to see his girls at least once a month.
At least once a month on the Apex payday.
I love that. Apex payday, and the girls are coming home, and you probably have to provide dinner too, and gas to get there.
Yes. Yep. For sure. For sure. Cole, I don't know of any videos off the top of my head. I can kind of look around for that a little bit on the divergence setup. Um, a lot of what Ray teaches, in fact, kind of what he taught today. Um, he taught the I'm gonna say basically the inverted version of it. It's how to buy in uptrends, but the if you flip the philosophy, that would be your divergence setup. You've got a higher high, and yet max is lower. Then that would be a divergence. Then I step from that to what are my value lines doing, and where am I in trend? If I'm above the moving average, I can't take that trade unless I get a double divergence, which means it does it again. It goes higher again, and max goes lower, or vice versa for buys. Um, so it's I think if you watch Ray's class and almost think of it in reverse, I will try to remember to look and if you're going to be in the room next week or later or tomorrow, I'll see if I can find any that I can just send the information to you.
Thank you so much. I don't want to keep you because I know your schedule's super busy. We truly appreciate you taking time and doing this for us. And some of the stuff that uh, Ray was showing today on the order flow, is the four lines that Mark's talking about. Ray will be going into, a lot deeper next week during order flow on those. So that's going to be helpful. Perfect timing.
Lori, your question, I think I'd have to check. I bounce between like 180 or 200 moving average. Obviously 180 to 200 doesn't make much of a difference, but that's the most common one for me. Yeah, it's not the fastest to turn, um, but it keeps me on the right side of the market 90% of the time.
Thank you so much. And I liked who was it up there that said, "Note to self: get a dog for to to help with your trading." I think
Yeah,
that's
helps, but also hurts because today I missed a big trade. But they just can't tell time. I need to get watches for the dogs so they know 9:25 I can take them out or
they
move to
know
Europe.
that.
Rob, yep.
There you go. Exactly. All right, I'm gonna stop this again. A huge thank you. Appreciate you doing this. And so I hope some of you guys others see this and will agree to help us as well, help other traders. I think this was so helpful. We appreciate you very, very much.
Thanks, Kim. Thanks for the opportunity, and thanks, guys, for the questions and the feedback. And Yeah, as Kim says, if I can do it, anybody can do it. So get out there and do it.